What's up, everyone? It's Scotty with MoneyVest. So markets here pulling back a little bit. More specifically, the NASDAQ here selling off a little bit over 70 to 80 basis points. The S&P 500 more or less flat. And the Dow Jones was slightly higher. So markets positioning did change, just a little bit more defensive on the day today. And of course, after hours, we did see a pretty significant sell-off. Not necessarily a pretty significant sell-off, but yeah, a pretty decent sized sell-off in a Tesla. Microsoft was also kind of back and forth here, but still down about 23 basis points. And we do have the futures right now obviously not doing super great because they are down over 70 to as much as 80 basis points right now. So we are somewhat looking for a red opening tomorrow on the back of the Federal Reserve FOMC meeting coming out tomorrow as well. At 2 p.m. Eastern is when the statement comes out, and 2:30 p.m. Eastern is when the press conference is. I will be live to cover the entire event, so look forward to connecting at that time. And as always, if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the members-only private videos, the trade alerts. There's over 20 plus trade ideas and options alerts and trade alerts channels, as well as the intrinsic value, fair value spreadsheet with my entire watch list as well. So links going to be down below. There is a 16% annual discount that does expire and get done with at the end of this month. So just about a couple more days left. If you're interested in joining, feel free to take advantage of that. So this right here is the market. So Dow Jones, S&P, again, trending upwards here since November. Of course, you've seen a very, very significant move to the upside, but on the day it was a slight pullback with, of course, the NASDAQ composite down 76 basis points to 15,500, S&P just a little bit over 4,900, and the Dow Jones, of course, just over 38,400 as well. So, lots of momentum for Dow being a little bit more defensive here, and S&P obviously pulling back slightly, with NASDAQ selling off quite aggressively on the day. So traders will watch for the updates out of the FOMC two-day policy meeting that got underway on Tuesday. So tomorrow is when the Fed funds futures expectations are pretty much pegged at rates staying unchanged, with a 97% probability that the Federal Reserve is going to leave rates unchanged, according to CME FedWatch tool. And technically, and this right here is the expectations from the market, which I'll go over in just a minute. But this right here is Joseph Cusick, and he says that technically the table is set for U.S. equity indexes to trade higher in the short term. But will the fundamental risks evolve in the coming days and undercut current price action until bears take control? It remains the case that markets are at fresh all-time highs and demands are going to continue to come in from a market standpoint. Now, this is what the market's pricing in, as we've already discussed, 6 rate cuts in 2024, which, in my opinion, of course, is very, very optimistic. And if the Federal Reserve does not meet expectations, if the Federal Reserve or Jerome Powell does not meet expectations to that degree, then that, of course, leaves the market open to some disappointment and some repricing risk, which we've already talked about in our previous videos. Apple here pulling back, Amazon back below my covered call strikes of 160, Google also selling off, Meta also down. I think after hours, a lot of these stocks, a lot of these companies started to really pull back. I did take some profits off the table on ASML. So I sent out alerts on that because I did want to trim some of my position because I was up close to 40%, and ASML here down a little bit over 1.6%. And I believe after hours, it was down even further, down about over 1.5% as well. So again, you can see how overbought it got. We had a resistance at 888, and we're starting to roll right back down a little bit. So I've got another, I think, stop loss I'm going to share in the Discord. I've got another stop loss, I believe, in the 850s. So maybe tomorrow we'll be looking at closing the entire position, taking some profits off the table here, de-risking and raising some cash for those potential opportunities, because it is time. It is time, folks. Like as I've mentioned before, you cannot time bearish reversals, but it's a lot easier to time bullish reversals. Not saying that timing in general is a good idea, because it's not, right? But bullish reversals are a lot easier than bearish reversals, because markets can continue to drift higher and higher and higher, and volatility can stay low for a very long time until we finally see that spike and until the markets finally start to roll over. But when they do, let the prices come to you and be patient and start deploying cash. And that's the whole idea with this market that's been pushing higher. There's been a lot of sentiment. There's, this market's drifting higher and higher. What I'm really doing is preparing and planning, creating a watch list, creating my shopping list, which I will be sharing with all the Discord members here soon. So there will be a members only private video in the first week of Feb where I will be going over my entire shopping list of all the companies with their intrinsic values and kind of give you guys an update on what I'm planning to do in 2024. I'll go over 15, 20 stocks, and these are my highest conviction stocks, and these are the fair values where I will be buying them left and right, and I will be deploying cash. So it gives you a clear idea, it gives you a clear understanding on, okay, this is what Caddy's watch list is, and this is what he's planning to buy, and at these prices. Are they going to get down to those levels? Maybe, maybe not. Doesn't really matter, right? But these are the prices that I'm willing to pay for these highest conviction stocks, 15 to 20, which I will be sharing the entire list with all the members in the first week of Feb. It's very similar to, let's say that you're going out there to buy a house or buy a car, right? You have a very specific model, you have a very specific sort of idea on what neighborhood, what location, what type of house, what type of apartment, and how much you're willing to pay. It's the same exact thing, right? And if you are a very patient buyer, you're going to allow for the prices to come to you. You're going to have that negotiating power, right? As one person famously said, you cannot negotiate if you're not willing to walk away, right? So it's the same thing with stocks, right? You can only be as good as negotiating if you're willing to walk away and be patient walk away from the table and be patient that, okay, eventually the prices will come to you. What you're looking for is distressed sales. And when the markets are in fear, when the markets are panic selling, that's distress, right? That's on the other side, the sellers are super fearful. They're getting rid of high quality assets, high quality stocks at very, very cheap prices. And that's when you swoop in with your huge cash pile and start deploying cash again and take advantage of that fear, take advantage of that, pain that, of course, the markets are going through. So that's the whole idea, right? It's just right now, market's pushing higher. I'm not like excited right now. It's like whatever. For me, it's kind of like another Tuesday or another Wednesday. It doesn't really matter. It's just markets are moving higher slowly and steadily. Volatility is low. So I'm like, okay, take advantage of these gains and, de-risk a little bit, raise more cash, sell some calls. And that's the whole idea. But if and when the markets pull back here, start rolling over on the back of tech or any other reason, as let's say the FOMC, the meeting's not that great, Powell's a little bit more hawkish, and we see the market selling off, that's when we have to be ready, right? So most of the videos that I do actually the market update side is not giving you guys an update, but helping you prepare for what may happen in the future, right? At the end of the day, nobody really knows what will happen, but it's just being prepared for all potential outcomes, right? If the markets roll over, great, we are ready. We are going to be ready. This right here is the entire 1 day, 1 week, and 1 month performance. It's been a little bit more split, and the market's positioning changed today to be a little bit more defensive. In the last 1 week, of course, we've had real estate, the only sector that's been selling off. Everything else has been pushing higher. In the last 1 month, comm services, technology, healthcare, financial, all pushing higher, with cyclicals, utilities, materials, and real estate selling off, with coffee and sugar prices, cocoa prices pushing higher, with soybean, NASDAQ, and lumber prices, canola, and wheat rolling over, with Bitcoin here a little bit over 42, just under $43,000, and Ether just over 2,300 as well. So coming over to the market, oil prices stable, a little bit over $77. That's most certainly going to be impacting inflation in the month of January. That's going to come out in February. So we're going to get that report very soon because in the month of January, crude oil prices are up over 8.8%. So that is not great news because, of course, oil prices pushing higher indirectly affects inflation and affects a lot of other categories as well. So that is something to keep in mind because as January comes to a close, the February report for inflation for the previous month for January is something to keep a close eye on, because crude oil prices have been up over 8.8% in the month of Jan so far. Volatility here, a little bit over 13, so down about 2%. So we continue to see volatility really kind of hinting a spike, but not really following through with it. We've seen a spike a couple times, rolled right back down, spike, rolled right back down, spike, came back down, spike, came back down. So it's kind of like itching. It's really itching to spike all the way up to 18 to 20. Maybe the FOMC is going to be finally that catalyst that pushes the volatility higher. But even if it doesn't, again, we just have to be prepared for if that happens, and when that happens, we are going to be ready to deploy cash. And that's exactly why it's important to kind of have a shopping list, have a list of stocks that you really are looking for. You've got high conviction stocks and who are ready to dollar cost average and buy more of in the case of markets selling off and those stocks coming down to their intrinsic values or even lower when the volatility is high. So very, very important indicator. I feel like it's one of the most underrated indicators that investors and traders use because volatility is so like it's like a hidden gem, because in the past, as we have done the analysis, we've kind of gone through the data. Statistically speaking, it doesn't stay high for much longer, right? It stays up, for a few days. It kind of stays up to 18, 20, 25, 30, 40 levels when it does spike pretty aggressively. And then it crashes back down, kind of creating that environment for the markets to bottom out and then start recovering back up and then trending upwards. So it's really, our analysis kind of focused on technical indicators, market breadth indicators, and we're really kind of looking for these levels to get hit. It's really not that complicated, right? We're not trying to time the market. We're not trying to go crazy with these predictions, but we're simply waiting patiently. If the markets do sell off and the volatility is high, we're going to deploy cash. We're going to look for opportunities. Can the markets go lower than that? Absolutely, right? Nobody knows how low or how high the markets are going to go. They always overshoot on both directions. But the idea is not to precisely time the market, but it's to get a general sense of how the risk reward is positioned in that current environment. And right now I can tell you the risk reward is not that favorable on the long side. On the short side, it is favorable, but at the same time, the confirmation is not there. We need to wait for confirmation in order to justify going short at these levels, because like I said, the markets are generally trending up and they can continue to drift higher as volatility continues to be muted. But if there's a confirmation for the markets breaking down certain supports, breaking down certain moving averages, then yes, the risk reward is very favorable on the short side. But you got to know what you're doing, got to be super careful, you got to plan the trade and then trade the plan itself. Now going over to the market, so S&P 500 first continues to kind of drift upwards here, pretty much at an all-time high, 49.24. Negative divergence continues. Support level is going to be 4,800 down to 4,690. Like I said, the futures are not looking super great, down 30 to 40 to as much as 80 basis points. And NASDAQ here also in a very similar situation, with a kind of trading right above that support of 15,004 to as much as 15,150, and resistance is going to be at 16,200, and support level is going to stay put down to 14,600 to 14,400 as well. So we've got, the RSI, the MACD starting to roll over a little bit for the NASDAQ as well. Talking about Apple, and Apple here really starting to roll over, which again is not a surprise considering that, we got a nice bounce back higher from that 200 SMA, and on the day, pretty brutal, down almost 2%. The RSI, MACD also rolling over. Support level is going to stay put once again down to that $180 level. We're going to go ahead and turn this level back into a resistance. It was a pretty good successful swing trade, 8%, 9%, can't complain. Congratulations to our members who were able to take advantage of that. Again, link's going to be down below if you're interested in joining. You'll get access to a lot of high quality trade setups, options alerts, and trade ideas as well. But support level is going to be down to $180 for Apple moving forward. Talking about Amazon. And Amazon, I've got covered calls at 160. I think after hours it did sell off even further. It was down another 1.3% to 1.31, so $155. Resistance at close to 161, so perfectly getting rejected at that level and rolling over. So I may look at my covered calls tomorrow, see where they are, and may end up closing them out for a profit. I think a couple more weeks need to go by for expiration. So I'll kind of play along day by day and see how those covered calls are doing. If they're up like 60, 70%, then I'll end up getting rid of them for that profit. But support level is going to stay put down to 155, down to as low as 143. That's going to be that next level for Amazon here. Tesla, on the other hand, is also seeing a little bit of that momentum back up, but intraday sold off pretty aggressively. It was up, I think, close to 2% at one point during the day. But this right here is actually going to be a resistance now for Tesla to break out of, because we have gone rejected here a couple of times in the past. This was a previous support. You can see support, resistance, all support turning into a resistance, which then again turned into a support, and then now again turned into a resistance. So that $190 to $200 level is psychologically a very big level for investors, for traders, for Tesla, because in the past it's acted as both support and resistance. And right now, since we're below that level, it's a resistance right now for Tesla. Now going over to Nvidia here. So Nvidia is starting to hit yet another new all-time high, up almost 0.5%. So just got to be super careful and cautious here. Nothing has changed from my previous analysis other than the fact that Nvidia's hit a new all-time high. So RSI incredibly overbought, so is the MACD. There's no confirmation yet, but support level is going to stay put down to $500 per share next for Nvidia. So that's going to be the level. Advanced micro devices starting to really roll over. So I think even after hours it dropped pretty aggressively. Yeah, 6.4%, because AMD I think did report earnings, right? There we go. Miss on EPS, slight miss on EPS, and then revenue coming in with a small beat. Again, these stocks, as we already know, were overpriced, overextended, overbought, overvalued. I cannot emphasize on the word over on these companies because that's how these companies were. And Nvidia here after hours also dropping close to 2%. So, it's possible that we do start to see a little bit of that roll off, going into tomorrow, of course, and the remainder of this week going into next week as well. So support level is going to stay put down to $157. So this right here is going to be that level to watch. And I will be doing a video on AMD as well to kind of break down the entire earnings. And if you do end up breaking down further, $130 is going to be that next support to watch for AMD. Talking about PayPal here, and PayPal on the day was basically flat, not really going anywhere. After hours down another 1.6%. And resistance is going to stay put at 65 with a support level at $56, $57 per share. So lots of consolidation sideways. And that right there is pretty much the range within which PayPal has been trading. So that is going to be the level to keep in mind with the resistance, like I said, at 65 and support level at $56 per share for PayPal. Visa, on the other hand, continues to trade at an all-time high. So very, very strong momentum for Visa, still carrying forward here. 277 is where we're at, up over 1.28%. Talking about Meta platforms, and Meta here on the day, down about 24 basis points. And earnings are coming out later this week. And we did have Meta drop almost 2% on the back of probably Google earnings, because Google was supposed to report. There we go, down over 5.6%, selling off down to $144 per share. So don't worry, a lot of the analysis, every single company we're going to analyze separately. I'm going to do a dedicated video on all these companies here, but Google here dropping pretty aggressively, and of course Meta dropping on the back of Google, as well. Talking about Netflix here, and Netflix on the day starting to roll over a little bit after the huge spike in earnings. After the earnings, it's starting to come right back down. 571, 572 is that resistance, and right now just down 2.2% on the day, and after hours dropping a little bit further moving forward. And then finally we come over to Microsoft. And Microsoft was kind of flat after hours, didn't really budge all that much, but $408 is where we're at. Support level is going to stay put down to $384 for Microsoft as well. And like I said, Google here definitely selling off down to that support at $144. And this, again, very, very overbought and overextended rally here. And in just one instant, the RSI came back down to oversold levels here. So again, staircases up, elevators down is how the markets operate. And then finally, we got Costco and Enphase. And Costco here on the day continues to hit new all-time highs of well over $700 per share. Very, very strong momentum for Costco. Continues to be one of the strongest, highest quality companies out there, especially in the retail space, and hitting a new all-time high. So just got to be super careful with the technicality. With that bearish divergence continues to play out. And of course, the price action at an all-time high here. Enphase, on the other hand, selling off down 2.5%. After hours was basically flat, but it's kind of struggling at that resistance of close to $108, $112, with the support level staying put at $90, $92 per share for Enphase as well. So hope you all enjoyed this video and a complete update on the markets. Get ready for tomorrow. It's going to be quite a bumpy ride, and I will be live for the FOMC meeting. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. 2 more days left for the investor early bird tier, 16% annual discount available. So always happy investing. I'll see you all in the next video.